Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracey, and this week I'm going solo to answer some of your questions. Yes, I do pay attention to what you post on YouTube, and I noticed some of you have been leaving questions for me in the comments, which I appreciate, and feel free to do because I do want to cover the stocks that you all are interested in. And I've also been getting asked questions about some stocks just when I'm out and about at various parties or even on vacation. People will ask once they find out what it is I do for a living. So we're going to cover all of these and more. They're mostly names you know because that's why you're asking about them, right? And so let's just dive right in because there's nothing like the moment to be looking at these stocks. Now, I do have a caveat, however. Some of these companies have not yet reported their earnings report for third quarter or the fiscal year, whichever one they're on. So by the time you are listening to this or watching this podcast, we might have had an earnings report or two in for some of these. But several have already reported, so that's good because I'm going to take a look at the fundamentals with these stocks. We're going to look at the price consensus chart. We're going to look at the detailed estimates and get some ideas on what's going on with these companies. Why do they have the Zacks rank that they have? And should you be looking to add to a position in some of these or start a new position perhaps? So again, let's dive right in. Okay, the first one someone mentioned was Nestle. I haven't covered this in a long time, and I had to look up what the ticker was, and it's N as in Nancy, S as in Sam, R as in Robert, G as in George, Y. NSRGY. It's one of those 5-letter tickers because it is a foreign company. It's traded on the OTC here, you can see, because it's foreign, but don't let that, sway you. A lot of great companies trade on the over-the-counter because they're foreign, and that's just where they're offered here in the United States. So Nestle, the big food company, they have a lot of different divisions, though. So keep that in mind. But I'm seeing right off the bat here that they're Zacks rank number 5. So I am kind of wondering what's going on with these estimates. Do we have any estimates? We must. If we have a Zacks rank, there's at least one analyst on it. But just scrolling down on just a quote page, market cap of $247 billion. They do pay a dividend yielding 2.2% on Zacks.com. Forward PE isn't too bad at 17.5. PEG ratio, though, of 5.8. That's high. So I'm wondering what's going on with the earnings here, but maybe not something that's good because the number 5 is the strong sell. Only 5% of all Zacks rank stocks are in either the number 1s or the number 5s. We often do the bear of the day on Zacks.com, so you can check that out every day. We do, every day that there's the markets open, we have a bear of the day. Sometimes the bears can be a little tricky because sometimes you find hidden gems in the bears of the day. There's some reason why the estimates are being cut. But let's look at what is going on with these estimates. And for that, we look at the detailed earnings estimates page. So I'm switching over to that. I am scrolling down. And so we only have the full year. That's not unusual with foreign companies. But there are 2 estimates on the sales side, 3 on the earnings. But I'm thinking, yes, the earnings have been cut. That's why it's number 5, strong sell. And in the last 7 days, they've been cut. We have 1 cut for both this year and next year, but 3 in the last 30 days, 3 in the last 60 days. So basically, it's looking like down. And you can see that on the magnitude side, it was at 556 just 30 days ago for this year, now at 540. And next year, and we want to look at next year because we're already in November now. So we're all looking at 2025 now, 591 30 days ago, and now 537. What is that looking like with growth? Well, just 1.1% this year and down 0.5% for next year. So none of that is super exciting to me. Let's look and see what it looks like on a price of consensus chart. This, should tell us just basically what the growth is looking like. And this is telling the whole story of those estimates cuts. And you can see them even for 2026. So something happened here, and either they warned or something. They reported and they cut guidance, or they said things were not going as well. And you can see the stock here now at 5-year lows. And this is why someone asked me about it on YouTube, because they are seeing, hey, this company, this great company we all know and buy products from them, is at a 5-year low. Is there some kind of deal here? But I don't like this. I don't like these estimates being cut here. I don't like estimate growth, declining into next year. And even though we've had this huge sell-off and we're at 5-year lows, the stock isn't that cheap. Let's look at even just the financial overview page on Zacks.com, because this will give us the PE, the PEG, which we already talked about. But look at the price to book, 6.2. That's high. That's not a value. We don't have a price to sales ratio here, but none of these are inspiring me as a value investor for sure to want to buy it. And as a growth investor, no, there's almost no growth here. So not like in Nestle here. I feel like this is still going to go lower. The strong sell is a strong sell for a reason. The analysts are pessimistic and the stock is too. Investors fleeing this. So it's a no-go for me on Nestle, but this is why you got to look at those earnings, and why I like to look at things like the prices of consensus chart on these stocks, because it might tell you a little bit more, even without doing a deep dive, even without going to the company and seeing if, hey, maybe they already warned. Even without doing all of that, I can tell you something is definitely going on with Nestle, and I don't like it. So too many stocks to buy out there. I don't need to be in this one. And also the dividend isn't enough to keep me in it either. So that's Nestle, NSRGY. But while we're on Nestle and I'm thinking about chocolate and those kinds of food groups, I want to take a look at Hershey's as well. So this is a number 4, which is a sell. Now, did they report earnings? No. We can see scrolling down a bit, earnings date before the market on November 7th. So by the time you're listening to this, they will have reported. Now, it's not unusual for the rank, in some cases, to drop to a number 4 right before earnings, as the old estimates drop off and we haven't gotten the new report yet. So it enters into this kind of strange period where the rank can suddenly go to the number 4, which is the sell. But let's take a look at the detailed estimates and kind of see, is that the case, or have estimates actually been cut here? So I'm scrolling down. Oh, well, that might not be the case with this one, because estimates actually have been cut into the earnings report. So even for the quarter, 2 estimates down in the last week, 7 are down in 30 days, 8 are down in 60 days, but those are probably from the last report. At least the 60 days probably is. And they just haven't maybe dropped off yet. But 2 are down for the quarter, 2 are down for the year, and 3 down for next year. Nobody's raising here. And then looking at the earnings growth, a decline of 2.1% for this year, another decline of 5.5% for next year. So those earnings are coming down a bit. Sales growth, not that inspiring. This looks a lot like Nestle's, actually. Only 1.1% this year, 2.3% next year. Is it cheap? No, this looks just like Nestle's. PE of 19, that's higher than Nestle, which was at 17. PEG isn't that great, 4.1. So let's look at the price of consensus, because that will tell us a lot. And they haven't even reported yet, remember. And this isn't as bad as what we saw with Nestle, up and to the right for 2022, 2023. But then here, 2024, they've really come down. And now the analysts are pessimistic on 2025 with that earnings decline and also 2026. What estimates we have in already for 2 years from now are also being pulled back on the pessimism. Now, the stock really rallied during the pandemic, went to new all-time highs, then sold off in 2023, and then, as you can see on this chart, on the price of consensus, has been moving sideways ever since. Up, down between $180 and $200. But given that the analysts are already pessimistic going into this report, I don't think there's going to be enough to really send it much out of this trading range, even if it's something better than expected. But the analysts are already cutting going into this report. That's a bad sign. They don't like to be wrong. Has Hershey's already warned too? I don't know. I haven't checked a deep dive on this one either. But if I was seeing these estimate cuts, I definitely would be looking to see if maybe there was a pre-announcement or the analysts are just going off of what their knowledge is of the company and things like commodity prices, chocolate prices maybe still being elevated and their cost structure maybe being higher than anticipated. So they're cutting those earnings. But either way, sales aren't that great either. So again, this is another one I'm not very thrilled about. It's got the number 4 sell. It's not yet a number 5, but it may be after this next earnings report. We'll see. So this is another one I'm not a big fan of, even though it has sold off. It's not cheap enough, and you're getting a bit of a value trappiness in there, and it's not even a value stock. So this is Hershey, ticker HSY. Okay, let's leave that area of the economy and go to a stock that many of you have been asking me about. It's on quantum computing, and it's IonQ. And this one I just covered for the Earnings All-Stars charts for the first time too, because you guys keep bringing it up to me. So just looking at what is on there with the rank, it is a number 3, which is our hold. IonQ is not reported yet either, but by the time you listen to this, it will have, because it's reporting on November 6th, which is this week when this podcast is coming out. November 6th, 2024 is the earnings report. So a lot will change with the rank. So we're not going to pay that much attention to the rank here, but we are going to look at the detailed estimates. Are any analysts on this company, are they bullish? Okay, so scrolling down, I see the Zacks consensus on the revenue for this year is at 40 million. So this is a small cap company. Next year, you're looking to double it though at 82 million if this happens. So big revenue growth expected for this year of 83.4%, because revenue was just 22 million last year. Next year, another 104%, like I said, up to 82 million. So I'm liking all of that. It's not making any money. Not surprising with some of these new technologies. It might take a while before they're actually seeing positive earnings. But one thing I don't really like about this company, right, just looking at what's happening with these earnings estimates, is they lost 78 cents last year. They're expected to lose 84 cents this year. That's not that big a deal. It's a decline of 7.7%. But next year, the one estimate we have is showing a loss of $1.09. Now, this may change and likely will, given this next earnings report. We're going to get a little bit more insight, perhaps, into what next year may look like. So this is all with a caveat. But right now, going into the number, I don't like that it's expected to decline another 29.7% for next year. Obviously, still negative earnings. So you know that going in, that this is a company that is in the growth phase. They're not focused on actually seeing the positive earnings, but they are really growing that revenue, which growth investors love to see. So what have they done? Just scrolling down a little bit more on this page to the surprise column, and they have surprised the last 3 quarters. So we may get one again here for this quarter. And right now, this one analyst is not doing anything with the earnings estimates going into this number. They're looking for a loss of 23 cents for this quarter. And when you listen to this, you will already have gotten the number. So, this one person is not positive, is not negative. Now, why is everyone bringing me this company? Well, they are in this hot area of the quantum computing, and the stock has really taken off. Over the last 3 months, it's up 100%. But I'm bringing up the price and consensus chart first because you can see it's all over the place. It's a small cap company, and we just talked about it. You can see some decline in 2026 as well, but with just one analyst perhaps covering it on Zacks.com at least. That's not a lot of info to go off of, right? So this is going to look a little bit messy and noisy, as I like to say. But we have seen this big surge in the shares here, and that's why you're all asking me about it. What's happening with IonQ? This is more of a stock to trade, not one so much to own. For the long term, you can see up, down, up, down. We're in the up phase, but we're going to get that earnings report, and we'll see. We'll see what people are thinking about and what the company actually says for the future and going forward into 2025. So that's IonQ. You're going to have a strong stomach, but it's IonQ, and I'm going to keep an eye on it, and I'm sure we'll be covering it on some other podcasts going forward. All right. We're going to go back to another well-known name now, and this is one that I got asked about just over the weekend with, family and friends hanging out. And I've owned it in my own personal portfolio for at least a decade now. I can't remember when I actually bought it. And it's Starbucks, ticker SBUX. And just looking at the Zacks rank, because I pulled up the quote page, and it is a number 5 strong sell. Nobody should be surprised by that because they did pre-announce and warn before their earnings. And then the earnings did come in as badly as they said they were going to come in. And so things were already, pretty negative with Starbucks going into this last earnings report. But investors are willing to give them the benefit of the doubt right now because they have a new CEO. And their turnaround plan is back to Starbucks. And everyone is hoping that means they might bring back some of the soul part of Starbucks that made it fun for many of us to go and hang out at the stores, and less about, is it a 10-second delivery through the drive-through, like that aspect of it. So we're expecting a lot of changes with Starbucks going on over the next year. It's not going to happen overnight. It takes a lot of time to turn around a big ship and get some new products perhaps in there, maybe some new design on some of the stores, maybe rethinking what is happening with the drive-thrus. Also, they have China, which is in somewhat of distress at the moment in an economic slowdown, and people really pulling back on Starbucks in China as well. So they have a couple different of their markets having some difficulty right now in many different factors. So there's a lot going to go on, but Starbucks stole away Chipotle's CEO, and he was brought in after Chipotle had some of its own problems and turned it around there. So people willing to give him the benefit of the doubt, but let's take a look at what is going on. Is this a deal? I've had people ask me like, hey, should I be buying Starbucks here now that they have the new CEO? And just scrolling down, forward PE is at 30.8. That is expensive. That's not a value. PEG ratio of 2.8. That's not cheap either. So neither one is screaming value to me here, even with everything going on and being at a Zacks number 5 strong sell. Now, they did raise the dividend because they are encouraging long-term shareholders like myself to stick around while they try to turn it around. It is only yielding 2.4% right now. And why is that? Well, even just looking over here at this price and EPS chart, you can see going back months, even before they warned, it's in this narrow trading range, but it's holding on to a lot of its highs. And even over the course of the year, it sold off earlier in the year and now has come back and it's just kind of hanging out there. But that's why it's not cheap, because the earnings estimates are being cut. Earnings are on the decline, yet the stock has remained elevated. So the price is still high, even when earnings are looking not so great. So scrolling down, you can see this fiscal year, earnings expected to be down 4.8%. They're looking for 315. A year ago, they made 331. So that's not a terrible decline. And then people are assuming after about a year that they're going to be able to turn it around. And we're going to see 18.7% earnings growth for next year. And that is $3.74. Revenue side up just 4.2% this fiscal year and 7.4% next fiscal year. Nobody is raising, not surprising, because they did pre-announce and said things are going to be worse than expected. So we have 10 cuts in the last week for this fiscal year and 7 for next fiscal year. But they just did report earnings. So that is all in response to what has been going on with the actual earnings and the conference call, asking questions and finding out a little bit more about what their plan is. So what does this look like on the price and consensus chart? It's not going to be pretty, I can tell you that. It's pretty dramatic decline, slashing there. But to be honest, the last couple of years, but these were pandemic years, were started off kind of bullish and then weren't so much. So that's why we've had a couple CEOs in there in this time period. And now we have the next new guy. And we'll see if he can turn this chart around so we can get what Chipotle's chart looks like. And then it really will be a deal in these shares. But you can see they have rallied in the last couple of months here. And so they're off the recent 2024 lows, but none of these are even back to the pandemic lows, not even close. And so it's not really a deal here. We're just kind of waiting to see, can they do it? Can they turn it around? But you're not getting it cheap enough to, dollar cost average into your position. I'm not dollar cost averaging into mine, but I will get that dividend to hang around and see what happens. But you might want to wait for a pullback here. Things usually don't go as smoothly as they start in the beginning of a turnaround. There's always the benefit of the doubt, right, at the beginning, and we're going to take a couple quarters. The real hardship is probably going to come by like next summer when we're seeing, are the changes working? Is it turning around? So this is Starbucks. It is the number 5 strong sell for a reason. And even if you're a growth investor, the growth isn't looking all that great yet, but the market is pricing in that the CEO can do it. So wait for a pullback and see what develops. That's what I would say about Starbucks, ticker SBUX. And then I wanted to finish up with a pandemic winner, and then it was a big loser in the growth stock sell-off, and now it's back. Carvana. Can't believe I'm saying it's back. I thought it wasn't going to make it, but look at this. Carvana, ticker CVNA. This is the online car dealership, I guess is what you'd call them. You want to order a car, buy it online, you can go on Carvana and they'll ship it to you. Zacks rank of number 1. And it's got the A for growth and the A for momentum and the style scores, a D for value. Not surprising because I didn't expect the stock to be cheap because it has been running last couple months. So scrolling down, it has a forward P of 234. So as I predicted, it's not cheap on a PE basis. But I know what you're thinking. I'm buying this for the growth. Who cares about the PE, Tracey? So if we are looking at the growth, let's look at those detailed estimates. It's got the number 1, so the analysts must be pretty bullish about it here. And just scrolling down, so 2024 revenue, 23% growth. 2025 revenue, 20.6% growth. I'm liking all that. And then earnings, 28% growth on earnings. They made 75 cents a share last year. They are profitable, and 96 expected for this year. And then look at next year, 147% earnings growth up to 238. That is pretty dynamic and surprising there. Earnings estimates, as you might expect with the number one. So this is a good way to see how the Zacks rank works. We've looked at a couple number fives. They were all being cut in the last 7 days. Now we're looking at a number one just by chance, and they're all being raised in the last 7 days, even for the next quarter here, pretty aggressively. So 4 estimates being raised for this year, 5 for next year. This must have been after an earnings report. Let me look, scrolling up. Yes, the next earnings date is in February, and I do see the green arrow on this earnings surprise chart. They had a big earnings beat there. Okay, it's not really letting me see that. So let's see if we can expand it out a little bit. But nevertheless, big green arrow means big beat. So that was a big beat. I'm scrolling down. This is how we're getting to 96, because 7 days ago, 2024 was expected to be just 34 cents. So this was a great quarter. Earnings, they beat 178% in this last quarter. Estimate was at just 23 cents. They posted 64. So big beat of 41 cents. But that still doesn't get you to 96 cents, so must have raised as well. What does this look like on the price to consensus chart? It must be pretty hot for this one. Yes, up and to the right, but pretty tight lines going up. So this has been the roller coaster, as I talked about. Carvana, big during the pandemic. And then 2022, Fed starts raising rates, growth stocks sell off, earnings comes crashing down. Then, slowly starts rising. 2024, we're back in business. Things are looking up and the stock is moving. So I'm liking this chart. I'm liking what I see. If you're looking for a growth stock, Carvana definitely has that, and it's got the momentum here. It's not back to 2021 highs, but it is pretty pricey here at 234 times. But I know if you're a growth investor, you don't really care about what price you're paying. You only care that it's executing and that growth is there. That appears to be the case. I am kind of curious what would happen if we do see a recession in 2025. Normally, don't see as many cars being bought in a recession, but maybe we won't have one, and then Carvana will be in the clear with that. But these are just some things I would think about if I'm thinking about buying this stock. But a lot of you are in it, and I know that this is one of the big momentum plays. It's back again, just like 2021, and we'll see if it can bust out 2 new highs. But that's Carvana, ticker CV as in Victor, N as in Nancy, A. CVNA, if you need a reminder, blast from the past of the pandemic about Carvana's ticker. So those are just 5 stocks I know many of you are talking about. You've been asking me about them. You've been putting them in the questions on YouTube. So keep asking me questions on YouTube, because I like doing these kinds of episodes to answer and talk about the charts, talk about the rank on some of these, what the analysts are thinking. Are they raising those earnings estimates? Are they cutting them? And this is a good, again, look into how the Zacks rank works, and also good to look at it during an earnings season to get some, color on what actually goes on ahead of an earnings report, after an earnings report. If someone, warns like Starbucks did, they warned well ahead of earnings, and what that means for the rank and the earnings estimate changes. So remember, the Zacks rank is computer generated. It is based on analysts' estimate revisions on the earnings. So a lot of those changes tend to happen during earnings season, which we're still in here in November of 2024. So the rank will change often. In the algorithm is run every day, so it can change daily, especially if you get an earnings warning or an earnings report in and those estimate revisions come in. You can see it change quickly and dramatically in some cases. So keep in mind the strong sells and the strong buys, the number ones and the number fives, are the smallest grouping of stocks, just 5% in each of those categories. So it's difficult to get into the Zacks number one rank and also in the number five. So usually something is going on that's not too great to get into the number fives. And we see that here today. So I love doing these episodes, love talking about the Zacks rank, and we'll do it again. Be sure to subscribe so that you make sure you get all of these podcasts on YouTube. Just go to zacks.com/YouTube to subscribe to our YouTube channel. You can also get us on audio on Apple, Spotify, Amazon Music, and SoundCloud. And let me repeat those tickers again in case you missed them the first time. We had Nestle, ticker NSRGY. It's 5 letters, NSRGY. We had Hershey's, ticker H as in Harry, S as in Sam, Y, HSY. We had the quantum computing, IonQ. It's red hot. IonQ is the ticker. Then we had Starbucks, which I own in my own portfolio. It's got the new CEO, ticker S as in Sam, B as in boy, UX, SBUX. And then we finished up with Carvana, back on the scene, and numbers looking good, ticker C as in car, V as in Victor, N as in Nancy, A, CVNA. And that's it for this week's episode. So again, be sure to subscribe, and I'll be back next week with some more stocks.